I'm Caroline Hyde. This is Bloomberg Technology. Coming up, tech giants hit new records, dominating the world's most valuable list. But will the earnings euphoria hold? Plus, two tech firms make their public debut with two very different performances. Is the IPO market getting too hot to handle? And as President Trump approaches his 100th day in office, we'll discuss the policies that have had the biggest impact on tech, from immigration to tax reform. First to our lead. This week has been filled with earnings from tech giants like Amazon, Alphabet, Microsoft, just to name three, all in which have just hit record highs this Friday trade. Alphabet reported Thursday and showed that the mobile boom is finally bringing profits as Google benefits from the surge in clicks on smartphone ads. And the company also downplayed the effect of its advertiser crisis at YouTube, citing growth from the video site as a key driver. Very pleased to say, joining us now for a breakdown on the massive week that was is Mark Mahaney, Managing Director of Internet Companies at RBC Capital Markets, and Bloomberg Editor-at-Large, Corey Johnson. Gentlemen, what a week. I'm going to kick off with Alphabet, as we were just talking about it, and of course it's one of the biggest players in terms of market cap among those that gave us their numbers. You overall impressed, because it was a beat across the board, Mark?
Yeah, I think they gave people three things, investors three things. First, they bought back stock, $1.1 billion of stock. They've got a lot of cash. They should return it. Secondly, they showed stable margins in their core business. And third, they showed very consistent revenue growth. They have grown their revenue 20% year over year for 29 straight quarters. That's one quarter over 7 years. There's no other company that's done that, I don't think, in history. It's certainly not at this scale. So the consistency of the growth, the management of the expenses, and the giving back of cash to shareholders, there's really nothing not to like in that.
Well, an accelerating growth rate, too. And that's the kind of thing that amazes me, is this 22% growth rate, revenue growth rate, is they've had one other quarter that big, I think, in the last 4 years, 5 years. So it's at this size to be getting so much bigger, it's interesting. But also the thing that really jumped at me was the click number, the 44% growth in clicks. It was just shockingly better, by orders of magnitude better than they were reporting just a couple months, quarters ago. And it just shows that mobile is just dominant for them.
And even as they had the end of the quarter, just the last 2 weeks of the quarter, concerns about YouTube, about the advertiser backlash, I spoke to an executive of Alphabet saying, look, in the medium term, this is going to be a modest effect, really, and actually we're going to invest longer term. Do you think it is but a small drop in the ocean for Google?
Yeah, I asked Sundar Pichai on the earnings call about whether they were seeing any pushback from advertisers, and my interpretation of his answer, which was vague, my interpretation was that they're not seeing any impact at all. That they think they were after the event took place, they went out of their way to go out to advertisers. Even Sir Martin Sorrell was saying how aggressively Google was going out there to try to find solutions.
Yeah.
Yes, that's right. And so I think it'll turn out to be just as momentous for Google as the debate over Facebook and ad measurement was 6 months ago, i.e. not material at all.
So search is still king for Google's Alphabet. What's interesting is they actually think eventually maybe even cloud will surpass that. Let's think of another cloud winner here, Amazon. I mean, Corey, again, phenomenal growth in excess of 20%, and that's what, 20 years that we've seen double-digit growth in revenue?
For the full company, yeah. I mean, it's a spectacular machine. I found myself in this quarter actually spending time looking at the retail business, which is of course bigger. But web services got so much attention, and when they started breaking out numbers, the Excel geeks. That'd be you and me. We're going nuts about looking at Amazon Web Services, trying to understand that business. But in fact, the retail business is just firing on all cylinders. The cash flow generation from the Amazon Web Services business allows them to sink even more money into the retail business and run this thing at negative margins, and grow and grow and grow and invest in distribution. And in ways, it's sort of interesting to see. In technology, we see the leading companies. A fact I bring up every once in a while is that leading companies are not 2 or 3 times bigger than the number 2 player; they're 10 times bigger.
Yeah.
But that's the network effect, and that was true of Cisco, and it was true of Intel, and it's true of Google, and on down the list. What's interesting is that Amazon has brought the network effect to retail, to selling stuff, and that they've got that sort of, they're 10 times bigger than any other, much more than any other online competitor in their retail business.
I mean, I just want to focus in on my Bloomberg, because talking of the sheer size and scale of these companies, I went into the S&P 500. If you measure it by market cap, member weightings, going to MEMB if you've got a Bloomberg, and then measure it by market cap. Check this out. We've got dominated by the tech sector. Apple at the top, but quickly below in terms of market cap is Alphabet, then Microsoft, then Amazon, then here comes Facebook, $427 billion market cap. And here they come in terms of their earnings as well. Mark, what are you expecting next week?
Facebook, we thought was one of the least risky stocks going into the earnings. We were a little worried about Amazon. We thought they may guide down. They did guide down, but the market was willing to look through that. With Facebook, we think the underlying trends are as strong, probably the strongest across consumer tech, probably the strongest across tech. I mean, they're going to do something close to 50% revenue growth. So that's faster than anybody else, and they're doing it at scale, and we don't think there'll be a dramatic cut to margin. So in terms of advertiser demand, we still see advertiser demand rising, demand to run Facebook campaigns, and increasingly Instagram campaigns is still rising. So we think this is, it's one of our top picks. We think it's one of the best fundamental stories across tech period today.
And another business that's had accelerating growth. It was growing at high 40% a year 2 years ago, 50% last, 51% I think last year in terms of top line. But I think Mark's point about Instagram is a really important one. That Instagram was a revenue-free product not all that long ago, and they've been, as regular Instagram users, we see the ads popping up. We see that it's become a regular part of people's business, and it's also growing users in ways that Twitter could only dream of. It's got to be such a much bigger platform. The decision to buy it for under $1 billion a few years back looks just beyond brilliant. And
still so much more monetization to come when you're looking at WhatsApp, when you're looking at Messenger as well. Let's look at the other fundamentals, because Mark, I know you've got a juicy set of facts for us. I want to be looking at the Trump 100 days.
Juicy.
Yes.
You've run some maths for us, talking of an Excel geek.
Yes, that's right. This is pretty simple, but it turns out I think President Trump made tech great again. So in the first 100 days, well, since his election, that's not the first 100 days, but since his election, the market cap of the tech leaders, that's the FANG stocks, Facebook, Amazon, Netflix, Google, plus Microsoft, plus Apple, it's risen 400 billion, so 4 billion a day. That's not something that people would have expected when they saw the news, surprise news that Trump was becoming president. There were concerns over whether he would try to remove some of their tax shelters, whether he would
go after Amazon because he didn't like Jeff Bezos' ownership of the Washington Post.
That's right, or go after the H-1B visa issues. None of that's happened so far, and in fact, the fundamentals haven't changed at all. We even had a very relatively successful tech IPO in this first 100 days. That's the Snapchat IPO. So it looks to me like tech has done nothing but benefit so far from President Trump.
I mean, I would say that's a market effect more than it's a policy effect from the administration. It's either here or
I know,
there.
but it's a nice narrative.
Not taxes, even though, I mean, so much crescendo of hope has been built on the tax.
It is true these companies, if there's a repatriation, might get a great benefit from that repatriation, but we'll see if there were rules attached to that, how it's going to work. And understand that companies like Apple and Intel and others who have a lot of overseas cash have built structures to keep those at a very low tax rate so that a tax holiday might not be something they want to take advantage of in a sizable way because they've already come up with ways to get around it.
And it's got to get through Congress. But gentlemen, what a discussion. Thank you so much as ever. Dynamic as ever. Mark Mahaney, Managing Director at RBC and Bloomberg Editor-at-Large. Corey Johnson, thank you very much for joining us. Now, a story we're watching for you. Tesla is expanding its battery cell production. Speaking at the TED conference in Vancouver, Tesla CEO Elon Musk says the company is likely to build 4 more gigafactories. Tesla currently has 1 gigafactory nearing the end of construction near Reno, Nevada. Musk did not reveal any specific locations for future sites. Now, coming up, Qualcomm is forced to lower profit forecasts it made just last week. Why the chipmaker's legal dispute with Apple is to blame. Next, this is Bloomberg. Now, another mover we're watching. Shares of GoPro tumble more than 7%, and that's almost 4 times its average trading volume. More money was rushing out of the stock despite sales in the latest quarter beating estimates and giving a bullish second quarter forecast. Investors are still not convinced GoPro can push ahead with a turnaround, and about 35% of the shares on the market are now shorted, according to its latest filing. Now, the legal dispute between Apple and Qualcomm is escalating. The chipmaker says that Apple is cutting off licensing payments related to the iPhone until their contract dispute is settled. Now, that's forcing Qualcomm to lower forecasts it made just last week. Qualcomm Executive Vice President and General Counsel Don Rosenberg said in a statement, Apple is improperly interfering with Qualcomm's long-standing agreements with Qualcomm's licensees. These licenses agreements remain valid and enforceable. Now, the company is one of the main suppliers of components to the iPhone. Joining us now to discuss is Bloomberg technology reporter Ian King. Well, actually, is it one of the most important suppliers? Because what Apple's trying to say is actually you claim all these royalties when we're actually not always using your chips.
Right. I mean, There's two things at play here. There's the chips and then there's the patents. The patents cover the fundamental technologies of all modern high-speed data networks and phones. So whether you use Qualcomm chips or not, you pay Qualcomm. That's the rules in the phone industry. Apple is saying, hold on a minute, you're paying a percentage of the full price of the phone. There's so many other things in the phone that why should I be paying you for these things? Qualcomm says, try and use a phone without our network chips.
There's an analyst out there, and they're saying this is all-out war. Do you think it is all-out war?
Absolutely, yeah. I mean, the expectations that Qualcomm had just a week ago when they gave the forecast that you just mentioned, they said explicitly, look, we don't, we're not ruling it out, but we don't really expect Apple to do this. A week later, they've done it.
And when you're looking at how much they've cut their profit forecast, I mean, it could be as much as 30%, more than 30% less of the top of the range in terms of earnings per share guidance. How much would this be dented if suppliers start being lent on by Apple and they too follow suit and stop paying Qualcomm?
It's a very complicated situation. How we can slice this up is if you look, on average, Qualcomm has taken $500 million out of the quarterly revenue. So that means on a licensing revenue, Apple indirectly through its suppliers is paying $2 billion a year in licensing revenue. That's almost pure profit. So that's a lot of money.
What do we expect to come on this? Because this is a legal wrangling that's going to run and run. It's already been 5 years, according to Apple, that they've been in a linguistic dispute, and now it's gone to the courts. Could these sorts of payments be on hold ad infinitum?
Well, again, two ways to look at it. If this goes through the courts, if it follows the usual procedures, appeals, backwards and forwards, a couple of years at the minimum. That's a long time to be without that licensing revenue if you're Qualcomm. Other way to look at it, from Qualcomm's perspective, this is just a negotiation. This is just a way of the two trying to find a middle ground where they can agree upon a percentage.
What surprised me is the shares did initially react for Qualcomm, but then they sort of bounced back and they were up about 0.2% last time I looked. Why is the share price not under more duress?
Well, look how Qualcomm has performed this year relative to other chip stocks. It's clearly underperformed. I mean, the shock is already built in. This is just kind of confirming some of the worse or less good scenarios that people have already kind of baked into their models. So on a headline basis, it looks horrible, but some people had actually been predicting that this might happen.
Already braced themselves. There is the one-year chart, and you can see that it's fallen down significantly since the end of last year. Ian King, great reporting. You've been all over this story. Of course, our Bloomberg technology reporter, Ian King, on Qualcomm versus Apple. Now, coming up, the IPO pipeline is heating up with 8 listings this week, including 2 tech firms just today, Cloudera and Carvana. We'll hear from the CEOs of both companies next. And a reminder of our interactive TV function. You can find it at TV Go on the Bloomberg. You'll not only be able to watch us live, but also see previous interviews and dive into any of the securities or Bloomberg functions we talk about. And you can become part of the conversation by sending us instant messages during our shows. This is for Bloomberg subscribers only, though, I'm afraid. Check it out on TV Go. This is Bloomberg. Now, it was a busy week for the IPO market, capped off by 2 tech listings Friday that turned into 2 very different first-day performances. Cloudera, a big data firm backed by Intel, rallied 20%, while Carvana, an e-commerce platform to buy used cars, tumbled 26% in the session. Bloomberg News IPO reporter Alex Barinka spoke to the CEOs of both companies from the New York Stock Exchange. Now, Tom Riley, CEO of Cloudera, explains why he thinks the company has the support of its investors.
It's important to understand all of our financial investors are extremely happy. Intel is both a financial investor but also a strategic partner, and they're very happy with this relationship. What we're doing with Intel is we are working on designing software and hardware together, the silicon of the future designed for compute-intensive analytics. We use machine learning in all our use cases, and work with Intel, we're speeding up the performance of it. So our partnership with Intel and their investment was a strategic relationship where we're doing joint engineering together to change how compute in the future will be different.
Tom, though, looking at that valuation, the optics is not great when you do have what's perceived as a down or a flat round. If you could go back, would you still have taken that $4.1 billion value? I know it was a strategic partnership, but, there is some concerns there, whether it comes to pricing options, employee morale, or just, the aura on the street.
Well, that's actually not the case. putting optics aside, we're all excited about this journey run. We're all excited about what we've built and the growth and trajectory we have going forward. We have so much behind us with that Intel partnership, we would never have traded that. What we're doing with Intel together in our 5-year, 10-year journey, going after this massive market, is incredible. Just think, by 2020, there'll be 30 billion devices connected on the planet. Pretty much everything and everyone is becoming connected. And that's creating so much data. In 2020, 90% of the world's data doesn't exist today.
Well, Tom,
all that new data is coming in our platform.
That was Thomas Riley, CEO of Cloudera. Now, Alex then spoke with Ernest Garcia, CEO of Carvana, and asked him if now was the right time to be going public.
So I think every company goes through a couple stages. One stage is exploration phase, where you're trying to figure out, does your product really fit your audience, right? I think that became very clear, a couple years ago, and we feel like we're in execution phase now, and public markets are a great place to finance yourself when you're in that phase.
When you think about the market that you're in, I know one of your financier partners, Ally, the biggest U.S. car financer in the U.S., has talked just this month bringing down its expectations for used car prices. When you think about some of the changes in the industry, what are you all blocking and tackling for 2017?
Yeah, so I think, the macro environment's always changing. The automotive goes through cycles every 7 years or so. I think what we're focused on is building our company to continue to grow very quickly. Our growth rates so far have far surpassed anything that's happening at the macro level. Whether it's car sales moving up or down, or credit moving around, or prices moving around, we're focused on what we're building.
And when you do look at that growth, top line, it was, 180% last year on a revenue basis, just upwards of $350 million in revenue. That's a big growth rate. Investors must have liked that. What was the feedback you had on how quickly you all are growing?
Yeah, well, so I think what's happening is consumers are responding, right? We've got an offering that we feel is very strong. It's very differentiated in the marketplace. Customers come to our site, they can browse an inventory of 7,000 cars. They can buy a car in 15 minutes. We deliver it to their door, and they save about $1,500 versus buying from a dealership. So that's a really high-quality offering, and that's what's driving our growth.
That was Ernest Garcia, CEO of Carvana. So let's get a wrap-up of the tech IPO scene with Bloomberg News IPO reporter Alex Barinka. Alex, 2 great interviews, 2 very different performances. And talk to us about whether, should we be blaming the bankers in this? Was Carvana mispriced? Was the other one leaving too much money on the table?
Well, it's funny because in my world, they actually both raised the exact same amount, selling 15 million shares for $15 a pop. But, they are 2 very different companies. When you look at Cloudera, that was arguably a very well-priced offering on the basis of its past round. As I was pushing Tom there a little bit, this is a big haircut in terms of valuation for them. They did bring up the Intel strategic partnership, but it's a question that folks in Silicon Valley are asking is, was that last round a little higher than maybe what was realistic? Investors seem to like that. It's pushing this idea that they're willing to bet on these early-stage unprofitable tech companies. You saw Alteryx and MuleSoft both list this year as well, and those 2 stocks have traded up. So Cloudera is kind of continuing this kind of Silicon Valley IPO pipeline that we are comfortable with. On the flip side, Carvana, a Phoenix-based company, is different. They are consumer-facing. It's basically a platform to sell online, to sell used cars online, and that industry itself, as CEO Ernie Garcia kind of alluded to, is having some macro shifts. The expectations for used car prices are coming down a little bit, and there's some kind of rumblings in terms of the car loan industry. You have people like Ally, which is the biggest U.S. auto financer, is upping their provisions for auto loans for the end of the year. Basically, they're concerned about people not paying back auto loans. So 2 very different situations here, but the bottom line is, look, we had 5 listings today at the New York Stock Exchange. If you're gonna go public, everyone's telling me if you're ready, you gotta go now, because you don't know how long these good conditions will last.
So the IPO landscape, therefore, seems healthy, but just for the short term. What about some of those that are just at the starting gate that you think are going to be coming up in the next couple of weeks or months?
The next couple of weeks might be a little quieter because it is earnings season and people like to wait to get refreshed financials, but everyone's kind of watching and waiting for the biggest companies. We saw news out of Dropbox this week, them talking about EBITDA being positive. So it seems like some of these bigger ones that everyone's paying attention to are at least touting the right numbers that people on the street will care about if they do go public. But look, looking forward, it's still enterprise. Appian filed this week, so there are some companies in the pipeline, but not as many hitting the road right now just because of the schedule kind of pause around earnings season.
And very briefly, is this just America or is this geographically based? I mean, is it international excitement for IPOs? In
the U.S. right now, things are looking really good. There's less economic unease. And right now with the markets still in the U.S. at highs since basically the recession, volatility this week fell to the lowest levels. It touched the lowest level since 2007. So calm markets, the comparables are trading really well. So if you are a U.S. company, you should go. In Europe, it's been a little bit more challenged, but you know, we should continue to see more activity here in the States.
All eyes on Spotify as and when that political risk starts to diminish in Europe. Thank you very much. Great reporting, great interviews. IPO reporter Alex Barinka for us. Now coming up, both Uber and a venture backed by Google's Larry Page unveiled new details this week on their plans for the future of flying cars. We'll dig into the investment opportunities for this emerging sector. This is Bloomberg.
I'm Elisa Parenti, and you're watching Bloomberg Technology. Let's start with a check of your first word news. President Trump, speaking at the National Rifle Association's meeting in Atlanta, discussed the Second Amendment, but also reiterated his immigration stance.
We need a wall. We'll build the wall. Don't even think about it. Don't even think about it. Don't even think about it. That's an easy one. We're going to build the wall.
President Trump is the first president in 34 years to speak at the NRA, and Congress has given itself one more week to agree on a spending measure to fund the government through September. Today's 382-30 House vote was followed quickly by unanimous Senate passage of a stopgap spending bill just hours before the midnight shutdown deadline. The measure now goes to President Trump for his signature. Just a few moments ago, the Yonhap news agency reported North Korea test-fired a ballistic missile, and it appears to have failed. Earlier, U.S. Secretary of State Rex Tillerson warned that North Korea is pushing the world closer to conflict with these tests. Tillerson chaired the United Nations Security Council meeting today.
In light of the growing threat, the time has come for all of us to put new pressure on North Korea to abandon its dangerous path. I urge this council to act before North Korea does.
Meanwhile, South Korea's foreign minister also discussed the nuclear threat posed by the North.
In a nutshell, North Korea's WMD capability, coupled with the intent to actually use them, bring us ever so closer to the tipping point. It's no wonder that some experts say the world is facing its greatest nuclear emergency since the Cuban Missile Crisis.
Secretary Tillerson says the U.S. does not seek a regime change in North Korea. And the Taliban announced the beginning of their spring offensive today, promising to build their political base in the country while focusing military assaults on international coalition and Afghan security forces. A spokesman announced the launch of that offensive. It boasts of Taliban control over more than half of the country. The Taliban dubbed this year's offensive Operation Mansouri, named for the Taliban leader killed in a U.S. drone strike last year. EU leaders are ready to tell the UK they are united when it comes to Brexit. There'll be a summit tomorrow in Brussels solely to discuss the UK's departure from the bloc. Leaders will talk of unity and warn the UK against trying to create division in hopes of getting a better exit deal. And a former federal prosecutor and civil rights chief at the Justice Department has been sworn in as President Trump's labor secretary. He is Alex Acosta. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti, and this is Bloomberg.
This is Bloomberg Technology. I'm Caroline Hyde. And as we discussed at the top of the show, when President Trump was first elected, many tech leaders spoke out strongly against him. So where do things stand now between Washington and Silicon Valley after the White House's proposals on the H-1B visa program, net neutrality and tax reform? I spoke with Bloomberg Technology Executive Editor Tom Giles and Bloomberg Technology Editor Alistair Barr about this and other tech stories that grabbed our attention this week.
There's still expectation that there'll be some kind of a reform of the tax code. I don't know how quickly it's going to happen. We haven't seen a lot of detail from the one sheet that we got from the Oval Office.
Congress might take issue.
Exactly. But if all goes to plan, you're going to see that the tech companies can bring back billions of dollars from overseas at a much, much lower tax rate. And that's going to result in dividends, buybacks, M&A, possibly executive compensation, things that the tech companies are eager to have.
And Alistair, this is why we've seen the FANGs, the Facebook, the Amazon, of course Netflix and Google all outperform when you're looking at the stock prices. But what does it mean not only for the giants but the smaller players here in Silicon Valley, the startup community?
Yeah, I mean, there's a giant sucking sound in Silicon Valley when it comes to smaller companies. These big internet companies are doing so well, and they have businesses that one VC this morning told me they're a natural monopoly where the scale that they get sort of begets more customers, begets more spending, and they're just very, very powerful. And in politics, it's the same type of thing where when you get to the net neutrality debate, Netflix kind of shrugged its shoulders this week, and the startups are the ones that are screaming because they're the ones that are probably going to lose out most.
Yeah, we had 800 startups and investors led by Y Combinator trying to really put a letter towards Ajit Pai of the FCC saying why they don't want to see a net neutrality repealed. I want to shift attention. We're just talking about the outperformance in terms of the giants and their stock prices and outperformance in terms of their numbers. Just looking at for the first, perhaps, underperformer, Twitter didn't perhaps spark as much hope about revenue, but they certainly did in terms of numbers of users.
User growth was key for Twitter this time around. That's the thing that's been getting them quarter after quarter after quarter. And what we saw earlier this week was, hey, they've moved the needle in the right direction.
6 million.
We're not seeing the profitability. We've got questions about that, revenue growth, questions about that, but users are back. And what the hope is for investors is that once you get the users, you get the advertisers to come in. Hey, we think this is a way to reach a new segment of the audience. We saw Twitter talking about people are politically engaged. There's a lot to talk about. You know, when Donald Trump tweets, people pay attention to that. They didn't name his name. They didn't name Donald Trump, but certainly people are taking, and new users are coming to Twitter as a place to have conversations about things that matter to them. And that really made a difference on their numbers.
And we saw share price pop, but they're coming off near a record low. Meanwhile, Alphabet, Amazon keep springboarding from their record highs.
Yeah, that's right. It's just a real story of continued dominance. We were worried before the earnings this week that the shares are already a record, so that the bar is so high, really. But they continue to churn out growth above 20%, and these companies are just so huge. That's like a Twitter every quarter, basically, a new Twitter every quarter.
Quite phenomenal. When we're looking at the bar being set high and perhaps flying over that bar, pardon the pun, I mean, we've had so much about flying vehicles this week as well, and it's always been sort of the laughable factor, but it seems to be becoming a reality. And actually from Alphabet, which was called Google, which of course founded by Larry Page, he's actually backing one of them that we saw take to the skies over the weekend.
Yeah, that's right. This one looked more like a kind of new age jet ski that flew in the air, and it's a product that's starting for kind of rich people who live on a lake, by the looks of things, by the video. But I think long term, like Larry Page is obsessed with transportation, making it more efficient. He's always been obsessed by that. So I think the long term play is get a few people to use this first, and then sort of segue into a commuter device maybe in 10 years or 15 years.
Talking of obsession, of course, this has been Uber's moonshot, and they've actually brought together the great, the good, the thought leaders in flying autonomous vehicles or flying vehicles in Dallas this week.
That's right. I mean, Uber is really trying to really be an innovation leader when it comes to transportation. Driverless, they made big advances there. Some of them have gotten them in trouble with Google and Waymo. And flying vehicles is another one. I think that's a little bit further off. I mean, you've also got to think about, the other ways that we're going to change transportation, right, in Silicon Valley. You've got Elon Musk talking about his subterranean tunnels. He's going to start digging, he's got that hole that he's digging.
Boring company.
Exactly. You've got the Hyperloop ideas out there. So there are a lot of people who are thinking very, very differently about our commute.
That was Bloomberg's Tom Giles and Alistair Barr there. Now, staying with the flying car theme, there are many hurdles ahead for this sector as entrepreneurs set out to develop the technology and navigate the regulations. So how do investors look at this emerging field? Here with us is Francois Chopard, CEO of Starburst Accelerator, which helps aviation and aerospace tech startups raise seed funding. And you were there in Dallas at the Elevate event organized by Uber. Tell us about how it felt. What was their excitement in the room?
So it was a really great event. A lot of people, and what strikes me the most was the energy was there, and you could really think that something was happening. It was the beginning of a new era of air transportation, and a lot of hurdles have been addressed, discussed, and I'm sure that what we're going to see, what we discuss, we're going to see that in the coming years. Very, very soon.
Uber said it would like to see flying vehicles being demoed in 2020. Is this a reality? How quickly will we actually start to see Uber using these sorts of flying vehicles as taxis?
So I think it's going to be a reality. It's going to happen much quicker than what we thought even a year ago, because there's a couple of elements that are ready now. We look at the battery. They have the right density, the right energy storage. So battery are okay. The supercharger, they're ready too. So for small and short haul, you're going to be able to refuel or recharge your vehicle in less than 5 minutes. The platform or the architecture of this vehicle have been defined, and there's some kind of consensus between a mix of an helicopter and a plane. And what did Aurora space system in terms of a demonstrator was quite interesting and quite feasible. So what I really think is that we're going to see these first flying cars, or at least new mode of transportation, doing their first test flight by next year. That's for sure.
So test flights by next year, maybe even being used as soon as 2020 as the idea goes. What's the market like? Where is the demand as it currently stands?
So what the new thing about that business is that as Uber is pushing it, Uber is creating the right business case for that. In the past, all the different other platform and vehicle that we've seen are more for leisure type of application.
The super rich.
Yeah, super rich, and which is still a niche market, and which means niche market. It's not well suited for VCs. Doesn't mean that they're not great product, but less for VCs, more for passionate business angels or sovereign funds that want to build their own industry. What we've seen is that. It's really a question of timing, and I think the timing is right. Uber looks at their business, and they operate in more than 500 cities. And they think that the number of these type of vehicle per city is between 500 to 1,000. And so when you do the math, when you spread that over 10 to 15 years, there's a real market. That's a couple of $1 billion market, at least for the platform manufacturer. And I think we're going to see another 1 or 2 unicorn emerging out of the aerospace segment.
You say Uber works in 500 cities, but I came here from Berlin, and it doesn't work all that pleasantly in 500 cities. Sometimes they've had to work with the regulators, and sometimes it's the taxis that will use Uber, and certainly not individual private drivers. What are the regulatory hurdles looking like for Uber to use flying cars, or anyone indeed?
So there's two things about that new business. That new business, they're not going to fight against the legacy taxi driver and industry and lobby, because they're going to bring more electric vehicles flying over the air. So you're going to emit less CO2. You're going to reduce traffic on the ground as you're going to remove some of it through the air. So you're going to really add value to the traffic or the commuting experience to each of these cities. Maybe Berlin or even Paris won't be the first adopters, that for sure. But when you look at cities like, so they talked about Dallas and Dubai, but when you look at cities like Jakarta or even Hong Kong, Shanghai, Beijing, or Sao Paulo, this huge mega city with terrible traffic, I'm sure they're going to be the early adopters, and they're going to push even the regulators to evolve either the certification process and all these necessary to make that happen quickly.
So, at Starburst Accelerator, what are you putting your money into at the moment? Who are going to be these unicorns that you say are born out of this?
So we are about to release our report on these new flying vehicles. We have listed 7 different categories. Killyhawk is in one of them. So out of these 7,
pages.
There's probably one that's going to emerge, which is we call the fixed wing electrical vertical takeoff and landing category. And in that category, there's a couple of players. Lilium out of Germany is one of them. Joby in the US, Aurora I talked about. Airbus as a big player is entering into the market, and there's still a few that have not emerged, but I know that they're working in more stealth mode.
And a whole ecosystem that will build around it, I'm sure. It's been wonderful having your perspective. Thank you for jetting over here, back from Dallas, after you were with all the movers and shakers when it comes to flying cars. Francois, Chopard CEO of Starburst Accelerator there. Now staying with Uber, Anthony Lewandowski, who is at the center of Alphabet trade secrets lawsuit against Uber, stepped down from his post overseeing self-driving car technology. Now, Lewandowski will remain at Uber despite his role change. The ride-hailing company said he'll take a lesser role on the team and will not be involved in decisions relating to LiDAR technology. Now, you'll remember that Google's autonomous driving unit Waymo accused Lewandowski of stealing trade secrets, particularly with respect to the LiDAR. Now, coming up, the VR wave is cresting. We speak to a Hollywood heavyweight on his plans to bring the technology to a screen near you. Next. And this weekend on Bloomberg Television, we bring you our best interviews from the week, including FCC Chairman Ajit Pai, speaking to us after the agency decided to roll back the Obama-era net neutrality rule. Tune in this Saturday for the best of Bloomberg technology. This is Bloomberg. Now, the premier VRTL Summit kicked off in LA this week. The event gathers Hollywood's leading innovators and storytellers in the rapidly evolving field of entertainment. One notable player that was in attendance was Robert Stromberg. The 2-time Academy Award winner is also the co-founder of the virtual reality company. It's a content studio and production company that combines storytelling and technology to create immersive VR experiences. Joining us now to discuss from Los Angeles is Robert Stromberg. It's wonderful to have you on the show, and I want you to tell us a little bit about the VRTL Summit that has just been kicked off. Does this really show that we're at this tipping point in Hollywood where they are gathering to want to adopt immersive technology that much more?
Well, I think that everybody's really excited about this brand new medium, and I think we're still at the early stages of what it could become. But I think what we're finding out is that it will be a really powerful storytelling tool indeed. And so at VRC, we're really exploring things like how to direct in VR and how to tell a story and how to develop characters, how to edit, those sorts of things. So I think it's still in the exploratory stages, but it's a really exciting future for, I think, the combination of cinema and sort of the gaming community and Hollywood in general.
I want to wind back a bit because, of course, you're a 2-time Academy Award winner. You worked on Avatar, Alice in Wonderland, Maleficent as well. Where there did you really feel you were pushing the boundaries and starting to dabble within the AR, VR, immersive entertainment world?
Yeah, I started this journey on exploring VR actually when I was working on Avatar. What I could see, because we were creating these 360-degree worlds for the first time and actually making a movie in that world. In other words, Jim Cameron had a virtual camera, and he could go into those locations and actually create a film that way. And so I just saw that it was simply a matter of time before we would take the technology and develop it so that we could actually step into those worlds, and that's what we see happening now.
And we're just seeing branding of the virtual reality company, the production company that you've set up. Where are you finding demand already coming from, stemming from? Is it largely gaming at the moment? Is Hollywood knocking on your door?
You know, I think originally I think everybody thought it was going to go strictly to the gaming community, but what I wanted to see is if this was actually something that could be a very powerful way to tell a story in a new way. So what we did is we did a cinematic test. We did a 4-minute test just to sort of put everything that Hollywood has to offer into this experiment, and that includes, theatrical music and Skywalker sound and all of those things that make us enjoy movies. And what we found when we made these combinations together was something not just cinematic, but it's actually even more powerful because the immersion into this world is so powerful that it's something that we haven't seen before.
What are the challenges? What at the VRTL Summit have you been talking about that is currently holding things back?
You know, I think for me, what I love about what we're doing right now is we're exploring how to get real actors into these worlds. So, for instance, we're exploring not just the array camera capture techniques and, dimensional video and those sorts of things, but what I want is the sort of holy grail for me is to get an emotional performance from a professional actor that we all recognize, that in a scene in VR that hasn't been done. I kind of joke a little bit that we haven't seen Meryl Streep in VR yet.
And tell us about that, because we have seen some big actors and big successes, and we've often seen actors have to make believe in some of their roles. But how is the acting community taking on the VR challenge?
Well, it's a little bit different approach. I mean, right now they're starting to embrace that, and I think once we start to see more compelling content and really great storytellers and scripts being written for VR, that will attract that kind of talent that we need. I also think that because we're at the early stages, we don't have the sort of capital we don't have $100 million at this point to make a film, so we have a smaller amount that we have to make the most with. So I think once there's more investment into content, better writers and storytellers coming into the scene, I think you'll start to attract many top talent.
And we look forward to sitting in the cinemas and consuming it. The virtual reality company co-founder and 2-time Academy Award winner Robert Stromberg, live from LA from us. Thank you very much indeed.
Thank you so much.
Now, a quick programming note for you. The Milken Institute Global Conference kicks off this Monday from LA. Bloomberg Television will be there, speaking to a great lineup of guests, including David Solomon, Co-Chief Operating Officer at Goldman Sachs. You can catch that conversation 10:15 a.m. Eastern. This is Bloomberg. Now, a few headlines we're watching for you. Facebook continues to fight against false stories that pop up on its site. Its chief security officer has written a paper disclosing that governments and other actors are using Facebook to manipulate political opinions in order to change the outcome of current events. Ever since the US election, Facebook has been under pressure to clean up fake news on the site, since so many users get their news from the platform. The attention has been renewed around the French election this month. Now, Airbnb is looking for professionals. Starting Monday, business travelers can use a new search tool to find homes and apartments that are business travel ready. BTR listings require a desk, Wi-Fi and hairdryers, among other things. The company expects its business users to quadruple this year and US business travel spending to climb more than 5% next year. And Volkswagen continues to bet big on electric cars. The German autos company announced plans to invest about $9.8 billion to develop electric and hybrid vehicles over the next 5 years. Now, the spending splurge is a part of Volkswagen's effort to counter the backlash sparked by its diesel engine cheating scandal. Now, that falsehood has cost the company more than 22 billion euros so far. Now, that does it for this edition of Bloomberg Technology. Remember, all episodes are now live streaming on Twitter. Check us out. It's at Bloomberg Tech TV, weekdays at 5 p.m. in New York, 2 p.m. in San Francisco. That's all for now. Enjoy your weekend. This is Bloomberg.